Hey, welcome everybody. This is the Q&A session for Wednesday, September. What is the date today? Today's the 8th, September 8th. Not on the slide, but that's okay. We know it's September. So appreciate each of you being here. I'm Mark Dannenberg. Kristen Kane is with me also. Hey, Kristen.
Hello, Mark.
All right, let's go ahead and get started. We are all about learning to trade and then trade to earn. So we want you to learn how to trade. We want you to trade to earn. The first part of that is the most important in order to set yourself up for a lifetime of being able to trade, to earn, build an income for yourself, build a part-time income, build a full-time income for yourself, a retirement income, whatever you prefer. Trading is one of the best activities that you can pursue, in my opinion. You can do it from anywhere. It's not limited other than your own access to an internet connection and have the right tools. We have built and continue to develop the right tools for traders. The adaptive entry system helps you identify trends, helps you identify when to get into a trade and when to get out of a trade. We have a real-time live trading room where we can provide support, answer questions that you may have about your trading. And we provide futures trading education as well as options trading education through our Profit Builder Plus program and the personal trading plan, which we provide for you to track your personal profit performance. Now, we use all of the tools that we talk about and that we offer to each of you. Kristen and I are actively trading a newer system that we're developing, the Aurora system. Some of you have asked me for updates on that. I'll provide a little bit of an update on that in this session. But we are actively trading that, and we're using a personal trading plan to forecast where we're going to be profit-wise, where it's likely that we're going to be profit-wise in the next 3 months, in the next 6 months, and in the next 12 months. We're pretty excited about that. So we're continuing to work on the Aurora system. We're hoping that in the next several weeks, we're going to be able to offer that to those of you who have an interest in participating in Aurora. But it looks very promising for most anybody who wants to be an options, or sorry, a futures trader. Aurora works very well with options also. I'm going to share a little bit of that with you this evening. We're also continuing to work on auto trading. This is more of a long-term development effort on our part, where once we have a solid set of signals fully confirmed and developed on Aurora, or using the adaptive entry system, which each of you participate in on a daily basis, we would then have the auto trading tool referred to as CycleBot be able to automatically execute trades through our brokerage account, through our futures brokerage account, based on the alerts and signals that we have set up within the software. So we're pretty excited about what we're working on, and I want to just move forward here. It's important, in our opinion, that you always update your personal trading plan at the end of the day. Personal trading plan is a tool that we developed to help you understand on a day-to-day basis what your 12-month forecast is. When I was working in my old corporate days, I had 2,500 people in my organization. I had a lot of managers, I had a lot of supervisors, directors, vice presidents. And one of the things that my company was very focused on was bottom line performance, financial performance in each of the offices that I had responsibility for. I had 15 offices around the country. So I had spent quite a bit of time in developing training programs for my leadership and helping them understand how to track run rates, how to forecast those run rates forward, and how to adjust when they saw that the current run rate or the current rate of performance, either in revenue or in expenses, was not going to lead them to a full 12-month success. So I brought that same concept with me to my training and my desire to train, educate traders. And we built the personal trading plan. Aaron was instrumental in helping me with the construct of that personal trading plan, the formulas and everything, and it's very, very simple to use. Krista and I use it on a daily basis, and all we do at the end of our trading day, whenever we are done, is we plug in our profit performance, profit or loss performance, the number of contracts that we traded that day, and it will take all of our performance to date, so whenever we started our personal trading plan, and it will then take that and calculate a run rate, an average run rate, factoring in profits and losses, and it will project forward then for a 12-month period, or a 3-month or 6-month, whatever you prefer, but it will project forward for a 12-month period what your potential income can be over the course of 12 months. I think it is one of the most valuable tools a trader should have in their arsenal. So let me take you to that right now. First of all, if you are interested in tracking performance and tracking details of trades, on the website optionsmoneymaker.com/AES-results, you can access on a daily basis what the performance was for that day, and you can look at the detail of each trade. So if you're fairly new to using the adaptive entry system, you can look at your trades throughout the day. If you're confused about something, first of all, Krista and I are available in the live trading room to answer questions. But if you want to do some comparison, you want to see where the trades resulted from, what the performance of those trades was, you can look at the detail. We track the detail by when the trade came on off of a 5-minute chart, whether we were short or long on that trade. 5-minute chart listed right here. What the strategy was. There are 4 distinct strategies within the adaptive entry system, plus fractals. So there's 5 that you might be trading. And then we track the profit or loss in terms of point value, where on the NASDAQ 100 futures, each point has a $20 value to it. We also track the drawdown. The drawdown is how much might it have moved against us before it actually moved favorably for us, or did that move against us actually result in a stop out? We have sometimes stop outs where we might get stopped out for a 20-point loss because we put a limit in to limit our exposure on any particular trade. So we have that level of detail out here that you can look at, and then you can look at also a daily summary. The daily summary takes every single day that we have recorded in our database, and you can take a look at a variety of different combinations of time frames as well as signals. So we track 9:30 to noon, for example. We have a lot of people that consider this kind of a part-time business, part-time passion, part-time job for themselves. So 9:30 to noon, taking all of the AES signals except the fractals. And then we have some other categories here. We have 7 to 4 all. But the primary categories that we look at are 9:30 to noon, and then 8:45 to 4. And 8:45 is because that's when we open the live trading room and make ourselves available to each of you, and then to the end of the trading day. And that is assuming that you're trading all of the adaptive entry system signals as well as fractals. So you can see what the averages are, meaning what's the average point value per day, what's the total number of points that have been earned over the period of time that we have tracked this in our database. And you can take that total number of points and multiply it times 20, because that is the total number of points times $20 would be your dollar value of earnings. We also, in this analysis, will show what throughout the course of the day, what the maximum profit or loss was in any particular category. So, for example, here in the 8:45 to 4 category, the maximum loss during the day or drawdown during the day is listed here. That doesn't mean that's where we finished the day. Just randomly, here's a day, for example, that we were down 20.5 points at one point during the day. But by the end of the day, we actually finished the day at 24.5 points positive. Here's a day that we were down 19 points at one point earlier in the day, finished the day by the end of the trading day up 71 points. There are other days where you might be up strong and then you finish down. So we don't get too hung up or preoccupied with a single day. we're looking for a range of performance. So with all that data, then what we do is we go to our personal trading plan. So let me pull this up here. Personal trading plan, as I was talking about, allows us to put in our profit or loss on a daily basis and the total number of contracts that were traded through that day. Personal trading plan is designed for you to choose what percentage of the balance of your account you want to allocate to contracts. Each contract at the broker that we trade at, Infinity Futures, requires $500 of margin. So in order to trade 10% of the balance of your account, you need $5,000 in your account in order to trade one contract. We have it set up so that we are willing to trade up to a maximum of 3 contracts. And as the account grows, you're going to see the number of contracts will scale up to 2, then scale up to 3. And that is all driven by the percentage of the balance of the account and the $500 requirement per contract. So when we get to the point where we can trade 3 contracts, we have sufficient funds in the account to take 10% of those funds and be able to trade 3 contracts at $500 a contract. All right, so we've got, let me start over here. We've got 4 categories that we really keep track of in terms of a personal trading plan. The first one is the 9:30 to noon trading for 2.5 hours. And last year, meaning the prior 12-month period, we started with $5,000 in the account, and we finished the 12-month period with $103,308. This year, so far, we are 9.4 weeks into a new 52-week plan, and we've had 22 losing days so far in that 9.4 weeks. The summer, I will say, has been a little bit more challenging, but I will also say that in my 30 plus years of experience in trading, that's not unusual. Summer can be a little bit more challenging, a little bit more choppy, a little more languishing, I'll say. And but what we do is we just stay the course and we just continue to take the trades because we have a tremendous amount of confidence in the signals. But the 9:30 to noon category, if we continue at the same rate we are on right now, is not looking like it's going to be another $103,000. It's right now forecasted at 12 months to be $43,000. So there's a couple ways to look at that. First of all, as I mentioned, we're only 9.4 weeks into a 52-week plan. We've got a lot of time out in front of us, and the summer months, the summer weeks are can be a little bit more challenging. So one way to look at it is, oh, geez, you know, we're not doing as well as we did last year. Another way to look at it is, last year we made $103,000 off of a $5,000 account. This year we're on pace right now, hopefully with some increased pace coming, but right now we're on pace to earn $43,000 out of a $5,000 account. So, you know, it depends on how you want to look at it, glass half full, glass half empty. That's still a really good part-time income if you're working 2.5 hours a day. So I don't know what it's going to end up being. I'll tell you after we get through the second 52 weeks. The second category that we track is 7 to 4. So we start paying attention to the market really at 7 o'clock in the morning, and then we track until 4. And this is taking only the trend bias trades and the continuation trades. So only 2 of the 4 AES signals. Last year, we started with $5,000 and finished the year at $138,000. This year, we're 9.4 weeks into this category, maxing out at 3 contracts as our account grows. And the current run rate suggests that we will be at $76,167. Again, I don't know what we're going to be at in the full 52 weeks, but that remains to be seen. That's a nice run rate, a little bit behind last year so far, but the last year is a full 52 weeks. This is only 9.4 weeks. And then we have the 8:45 to 4 category. This started at a different time than the other 2 categories. Again, we started with $5,000 and we're 35.4 weeks into this category. And we are on pace right now for about $116,989 of income from that $5,000. And then the last category is something that Erin really immersed herself in studying and looking back through our database. And it was 8:45 to 4. And how quickly can we get to a 20-point profit target? Or if we had a drawdown of 60 points, we stop. And what would that result in? So the tool here, the personal trading plan tool, is designed to be able to factor in if I want a 20-point profit target, if I'm willing to stop at 60. Anyway, we are just 3.4 weeks into a new year. We made $96,671 off of $5,000 in the first year. And right now we're very close to that same run rate in the first 3.5 weeks with a projection for the second 52-week period of just over $85,000. So definitely there's a range in here, and the ranges apply to those of you who are picking and choosing when you want to trade. Some of you want to trade earlier, some of you want to trade later. Some of you want to trade only a portion of the total 5 signals that are available through AES, including fractals. So the personal trading plan, I think, is an essential tool for you to help decide when you want to trade, because it's going to give you an idea of what your reasonable 12-month income projection can be. All right, so I'm going to pause that here. I'm going to put our screen on the adaptive entry system chart. Show that chart there. Market has reopened now, so now we're back to live action. And see what kind of questions you have. This whole session is really designed for you. Each of you are active traders and are at different levels of understanding how to use the adaptive entry system. And it is very common to have questions when you're in the midst of learning something new. So we make ourselves available generally every other week on Wednesday, and we are here, Kristen and I are here to help answer any questions that you might have that would help you really work your way towards being a very, very successful trader.
And Mark, we actually have a couple questions already.
All right.
So the first question, Chris is asking about the solid yellow downward pointing and solid blue upward pointing triangles that appear occasionally on the price bars on AES chart. I know, I think somebody had a question in the room earlier today on that as well.
Yeah, they did. So here's a solid yellow that Chris is talking about that's pointing down. And here's a solid blue right here pointing up. So these are what are referred to as bearish and bullish divergent bars. So first of all, we don't use them very often for actual trading. We don't use them very often to take a trade off of. But it is another piece of information that as you learn more about technical indicators, it's out there for you to see. So let me explain what it is and why they are there. So first of all, a bearish divergent bar, definition of a bearish divergent bar, which is going to be highlighted by a yellow triangle underneath the bar, is that the high of the bar was higher than the previous bar's high, and that the close of the bar, let me really zoom that up here, the close of the bar, which is shown by this horizontal hash mark on the right side of the bar, is in the bottom 50% of the range of the bar. So you have the low to the high, and if you drew a midpoint between the low and the high, it means that the close of the bar was below the midpoint. So it's in the bottom 50% of the bar's range. So a higher high than the previous bar's high, and the close is in the bottom 50% of the range. Why does that have any significance? It is because divergent bars can frequently be the first indicator of a coming end to a trend. So in this case, we have a long trend in place, and you can see bars that opened at one point and closed higher in the bar. You can see a bar here that opened higher, it closed lower, but it never made it above the high of the prior bar. So it's still really in a fluctuating trend. When you have a bar that opens, that moves higher than the previous bar, that indicates that there is energy within the market pushing price higher. But the fact that it closed in the bottom 50% of the bar's range tells us that it was not able to sustain that energy. So it prints a divergent bar. Like I said, we don't trade divergent bars, but if you are trying to figure out, well, when might the trend end, and you're looking at some of the lower indicators that we also use within the adaptive entry system, divergent bars can be an indication of that. So bullish divergent bars are just the opposite. It is where the low of the divergent bar is lower than the previous bar's low, and the close of the bar is in the upper 50% of the bar's range. And this can be an indication that there might be a coming end to the trend. There was a bigger movement lower, enough to move it below the prior low. It didn't sustain it. It moved back up in the upper part of the range, close to where it opened. In this example, you can see that it continued to move lower, and then we started printing divergent bars again. When you start to see series of divergent bars, that's really a stronger indication that we're starting to find perhaps the end of a trend. And what's interesting is, and as I mentioned, we don't trade divergent bars specifically, but what's interesting is you can start to see groups of divergent bars printing generally around the same time that you start to see the lower indicators starting to shift. So in this case, the Cycle Finder Plus indicator crossed up from the buy zone about the same time that that divergent bar printed, and the profit flow oscillator is now trading above the zero line. Hasn't printed a blue bar yet, but is now above the zero line, which indicates possible shift to the upside. So these are all just hints and clues about where we might be going. I would personally not incorporate them into my trading decision. I would not stay out of an AES signal trade because I see a divergent bar. I wouldn't get into a trade specifically because I have a divergent bar. I would still follow the signals and just have a mental note that, you know, that divergent bar helps me feel strongly about that trade, and that there is a high probability of some sort of a reversal that might be pending. So it just helps you interpret the market a bit more. All right, and then Rob is asking, were you on the same pace at this time of the year last year? I don't right now have the ability to go back, Rob, and see that on the personal trading plan, because the forecasted rates are all calculated off of the complete history. So I don't really have the ability to see that right now. But that's not something that would be of interest to me, because I know what the full year did last year, and I know what the full year is projecting, and I know this is not something that will change. The prior 12 months won't change. That's locked and done. This number, this 85,000 number, could change, you know, on a daily, weekly, monthly basis. It could end up being higher as perhaps more activity picks up, or it could end up projecting to a lower number if we continue to have some of the same slower days that we've seen here in the last couple of weeks. So Chris, regarding the divergent bars, if you just let me know if that's what you were looking for.
So Mark, Greg is asking, how is Aurora doing in the past 9 weeks versus AES?
So that's a great question, Greg. Thank you for asking. Somebody asked me to talk about that tonight. So I'm just going to give you a brief overview. Um, this is our Aurora tracking. We have 32 days law, 32 trading days. So 6.5 weeks logged. We have more history than that, but it takes us a while to go through the development of a system, test trade the system in sim, test trade the system in live, continually modifying the rules, modifying the approach, modifying the criteria, and also the behind the scenes indicators that are all making up the Aurora signals. And then we get to a point where we feel like we have a good solid set of rules because it's flowing. And then we start building our database. It doesn't do us any good. Well, we actually have database from prior, but it doesn't do us any good to incorporate that into this because that was all with, you know, an evolving set of rules. So here's what we've seen so far. And you'll see that there's a breakdown between some time frames. So we're looking at the Aurora system trading from 7 a.m. to 11 a.m. And the average point production is 52.25 points a day for the last 32 days. We actually had 3 losing days in the last 32 trading days, And I'll scan through the daily summary here in just a minute. The average daily profit on our winning days is just under $1,200, so just under 60 points a day for our winning days. And on our losing days, those 3 losing days, it's an average of about $431. 7 to 4, if we were to trade the entire day, which by the way is a long day to trade for an individual to trade from 7 to 4. It's long, and it's made longer on days that are more challenging because then it just becomes a little bit emotionally exhausting. Plus, Kristen just can't take it trading with me that long. Is that right, Kristen?
You said it.
But the reason we track this performance is because, as I mentioned to you, we're in the process of building our automated trading tool, CycleBot. We can assign CycleBot to trade any time frame that we want, and it never gets exhausted. We can assign it to trade 23 hours a day. Now, before we start trading anything outside of 7 a.m. to 4, we need to invest some time to do a bit more research. So the whole development of CycleBot requires programming, time and money, and it requires research, time and money. So you guys know, we're not a huge organization, but we're very committed to developing things that we think will help you, and they certainly help us. We're not just developing it for you, we're developing it for ourselves. And if we feel it works well, then we're going to make it available to you. So that's why we track all these timeframes that we might not normally want to trade. Now, here's a very, very interesting dynamic, though, that we found. If you look at this from 7 to 11, the average, you can see, you know, the production over here, the average is 52.25 points a day for the last 32 trading days. If you look from 11:01, right? So if you never traded after 11, but you want to scan and see what 11:01 to 4 is, that 5-hour period is only averaging just under 21 points, and there were 10 losing days out of those 32 days. So for the most part, until we have CycleBot, some sort of an automated routine that will just take the trades without any emotion invested in it, we are limiting our trading for the most part from 7 to 11. There are some exceptions. There's some days. Today I happen to trade a little longer. But with this knowledge, we can move into trading any time frame with confidence as to what to expect. But this was a big tell for me right here. This was a big tell that in 7 to 11, those 32 days, we had 3 losing days. And in 11:01 to 4, those 32 trading days, same 32 trading days, we had 10 losing days. Now that also means that we had 22 winning days, and we are averaging, almost 21 additional points a day. And that's why the 7 to 4 is 73 points a day. That's pretty strong in my opinion. So what we're doing is we're building information in a database that will help us decide what we want to do, how we want to trade. When we roll out Aurora and make it available to you, you'll have this knowledge. We'll share this with you, and you will be able to make your own decisions based on the database that we have invested the time to create, so that you can wisely and confidently choose when you would prefer to invest your time in trading. I just find it fascinating, and it might change, and we're going to see those changes as they develop, but it might change. But I find it fascinating that I can average 52.25 points a day for 4 hours, and then the next 5 hours is going to only give me 20 points. Yeah, well, 20 points is still 20 points, if you want to invest the time. But I'd like to not only have financial abundance, but I want time abundance also. And so if I step away at 11 o'clock, I can go walk my dogs. I can, go outside, hang out on the boat. I can do what I want to do. So those are choices that we have available to us because of the time we've invested in building this database. Now, let me just scan through the daily summary for you here real quick. The 7 to 11, this is primarily when we're trading. Today was actually a losing day, but the loss was $35. So the losing days, when we have a losing day, they're just not at all overwhelming. We had a $545 losing day, and we had a $715 losing day. So those are the pure 7 to 11 numbers. There are days, let me see if I can remember what day it was. The Friday, was it Friday? I think Friday the 3rd. Yeah, right here. Friday the 3rd finished very, very strong. But we were up 60 points at 8:30. And although we ended up finishing up over 80 points for the whole 7 to 11 day, it was a Friday ahead of a holiday weekend, 3-day market holiday. And at 8:30, in the first hour and a half, we were up 80 points. Sorry, I misspoke. We were up 60 points. We just decided to stop for the day, and we plugged it into our personal trading plan. And we were able to see clearly that it had a positive impact on our 12-month forecast. So, trading, whether you're trading Aurora, whether you're trading AES, they are all winning signals. That's my personal view. They're all winning signals. We have the data to support that, the personal trading plans for the past 12 months to support that. Sometimes it's not as much as you might like it to be, but they're all winning signals, meaning you stay the course over the course of 12 months, and you should have a nice profitable outcome for your trading. We're even tracking weekly totals here. Go back to the first week we have in our database, week of the 26th here, 4,300. This is all based on one contract. So 4,300 for the week, 6,300. Had a nice week that was up 10,400. This week we're only up $115, 2 days. Yesterday was kind of weak, and today was a small loss. So I haven't produced a lot today, but including this partial week, averaging on a one contract basis, about $4,700. So I'll just share with you the personal trading plan here real quick. We're plugging in what our actual performance is. Sometimes we stop before 11. Sometimes we trade a little bit after 11. But the system average from 7 to 11 for 32 days on winning days is 59.88 points. That's the average winning. Sorry, that's not. That is the average of the winning days. The average of the losing days is 3.37. So we use those values. These values right here are the actual run rates since we started building our personal trading plan, so we started the database and then we sequenced into the personal trading plan. So we only have 2.5 weeks in our personal trading plan so far. If we scale up to 10 contracts, and I think some of you heard me say Kristen and I together, are being fairly aggressive in our personal trading plan in trading Aurora. We're using these values because I know that's the average of what we've produced for the last 32 days, not what we've produced since we started the personal trading plan. That's right here. But those two will sync up here in the next couple of months, and we'll use whatever the actual run rate value is. But for now, we're using what we know the system has produced for 32 days. And that's a $577,000 opportunity by December 15th. It's a $2.2 million opportunity for 12 months if we are willing to scale up to 10 contracts. And in this case, I have reduced my risk profile from 10% to 5%. So fairly small risk profile. All of these values can change. I can change that to 10%. It doesn't change the numbers that much. And so I'd rather scale my contracts based on a smaller value. Do I want to trade up to 30 contracts? That's a conversation that Kristen and I are having, and we will continue to have it until we get to the point where we have to make that decision. But if I'm using a 5% value, scaling up to 30 contracts doesn't seem unreasonable to me. And that has some pretty nice potential outcome. Now, remember, folks, we're only 2.5 weeks into this. I don't know what this 12-month number is going to be. I don't know what it's going to be. But if I use a maximum of 10 contracts and projected that value 2.2, and I came up short by 50%, I'd still be pretty happy because this account started. That happens to be the amount that was in the account at the moment. I just decided not to put more in. I decided not to take any out. And it was $12,905.30 on the day that we started our personal trading plan. So we'll see where we go from August 23rd, 2021 to end of August next year. But that's what Aurora is doing. We're pretty excited about being able to share it with you at some point. We just have to finish our own validation. Let me pause there and see if you have any thoughts or questions.
I thought I'd leave Greg's response. He said, wow.
Well, we're saying that every day, Greg, because first of all, I'm a huge, huge fan of the adaptive entry system. I think it is an incredible system. You see what it did over the course of the past 12 months. Aurora has taken the adaptive entry system and plugged a few opportunities to improve. We've plugged in some exit logic and exit rules that will take us out of a trade before we get too far behind on the trade. Not always, but it's improving upon some of the exits, and it's improving upon some of the entrances. And we're also using a coordination between 3 and sometimes 4 different time frames within Aurora, which really provides a solid alignment and confirmation of the signal. When you see Aurora, take here. When you see Aurora, you're going to notice that all the AES signals are still in Aurora. Aurora doesn't replace AES. Aurora enhances AES, and that's what we're looking forward to, is just kind of adding more value to AES by actually creating 2 additional indicators that are the definition of Aurora. And you can use it for trading futures, obviously, any futures contract you want to trade. We have most of our experience with the NASDAQ 100. But one of the things that I've been paying quite a bit of attention to is Amazon using the Aurora signals. And if you start to just scan at a 30-minute or a 15-minute chart on Amazon, you start to notice what the opportunity here is. Here's a Aurora signal that came on September 3rd at 12 o'clock to go long right here, even though the price bars are still identifying it in a short trend. It was an early indication. Could have gotten in there, and Amazon was at 34.59. Ends up moving up to a high of 34.78. Sorry, 35.11. So about 50 points. If you're trading at the money, 50 delta options, that's a potential $30 profit. So it's working with options. We're not trading it on options yet. That's one of the next things we're going to do. We're going to be adding somebody to our team who will be focused exclusively on trading the Aurora system on a handful of stocks and cash indexes. But as I just scan through and I see the signals and I see the entries, it's really very solid. So there's two different parts. There's what we call CXA, and then there's PBA that make up Aurora. And even if you didn't take the CXA back here, there's a PBA CXA alignment right here that would have put you into a nice trade. There's a short, get a little bump down there. And the last thing I'll share with you about Aurora is I don't trade Bitcoin. I don't trade cryptocurrency. I've got friends who do. I can't personally teach you how to trade cryptocurrency, but I can tell you when to get in and when to get out, because Aurora system is doing that just like a rock star. Let's go all the way back. I'm actually on a 1 week time frame here, so it depends on what you want to trade. But here's a weekly entry right here, the week of October 12th last year, and you really have no exit to get out until the week of May 10th. October 12th to May 10th. Now that's a very high level view based on a 1 week chart, but Bitcoin went from 11,374, and forget about the highest high. You're never going to catch the highs and lows, but you would have been out at, let me see if I have that right, 11,374, and you're out at 58,313. That's a reasonable return, and you held it from October until May. Sorry, yeah, until May. Anyway, it works on cryptocurrency. I was looking today at another coin, Ethereum, and you've got the same type of a thing here. You could look at it on a weekly, you could look at it on a daily chart, you can look at it on a 30-minute chart. Depends on what type of personal trading you want to do. So we're hoping to incorporate some crypto trading, probably not training, maybe, but no plans for the training, but crypto trading using the Aurora system. So if any of you are interested in cryptocurrency, Aurora may be the best place for you to be once we release that.
We've got quite a few more questions that have come in. Rob is asking, do you have an estimate on Aurora, when it'll be ready, and what the cost for it would be?
We don't have a specific time frame on that. I will say in the next few weeks. I'm hoping before the end of the year. I just want to make sure that we've done a full due diligence on it. And Kristen is, by the way, a phenomenal trader and tester when it comes to Aurora, and she is diligent, much like Aaron was with AES, in recording, every note so that we on every trade, so that we can really analyze it properly. We've started to develop, thanks to Kristen, an outline for the training. We're getting prepared for that. I just personally want to be 1000% comfortable that we've really nailed everything and that we've gone through a variety of market experiences, both slow and sluggish, to kind of wild and crazy. Of course, recently, in the last several weeks, I'm going to say, market open has been wild and crazy, even more so than normal. And then you get into the very, very sluggish period. And one of the things that I'm just in love with about Aurora is how it manages you through those really annoying sluggish periods where it just seems like nothing is moving, but you just take the signals, you take the trade off. Maybe you made 1 point, maybe you lost 2 points, because you just don't know when the breakout is coming. You don't know when the breakout's coming. So
Mark, David is asking, with the kind of volume you're talking about, are you concerned that your total clients may negatively impact market liquidity?
not at all. Not at all. I used to be asked that question about trading options on indexes and on ETFs. We're trading the NASDAQ 100, and if we go to different indexes, we might go to the S&P 500, the Russell 2000. These are some of the most widely traded futures markets in the world. I have no concerns whatsoever with that. My little 10 contract trade, or if all of you took 5 contracts or 2 contracts or whatever, it's not going to have a bearing on market liquidity. I'd love to know that we could be in control of the market, but it's not. It's not.
You don't have that kind of power, Mark.
Not yet, Kristen. I'm working on that.
Do you know, Greg's asking, do you need to upgrade TradingView to Pro Plus?
If you're thinking about what level of TradingView to have, I would take the highest available level.
Okay.
Then you have no limitations. That's my personal bias, and I say that pretty freely because the difference in price between the various levels is really not significant at all, considering what you're going to be using it for.
And David is asking, he joined a little bit late. Can you go back to and mention what the largest drawdown in a trade with the Aurora trading system was?
Well, the largest drawdown in our database history since 7/26, the largest drawdown, let me just see what it was here. $1,125. Sorry, $1,140, which was today. That was today, the largest drawdown that we've had in trading the system. We have a couple of early adopters of the Aurora system, a couple of clients who are in the middle of individual coaching programs, and they're working with the Aurora system with our tutoring. And I sent one of the gentlemen a comment today that this is the biggest drawdown that we've seen to date so far in Aurora, and yet we still finished up positively for the day. In fact, the 7 to 4 category finished positive $1,170. It was a really good afternoon today, which is unusual based on our history. Fergal's just asking, how will Aurora differ from AES? There's a little more to that question than I can get into tonight, but I will just say that AES exists in Aurora. AES exists. All the signals are there. We're adding 2 additional signals, and they're these big red and blue boxes that you see here. Very, very, very simple to understand and identify. And they interpret multiple indicators. Behind that blue box right there is a set of multiple indicators, which allows us to set an alert. So it allows us to set an alert, and so we can see in the alerts log when we have a signal. And the other thing it will do is, because we have an alert, we will be able to tell our automated trading platform, CycleBot, look for this signal. You can't, it's much more complicated if we're building CycleBot to try to tell him to look at, 7 different technical indicators and find alignment or coordination between those. Now, we've already done that. We've already done the programming work to create a single signal. And now we can just tell CycleBot, find that single signal and act on it and send the trade to the brokerage account. And then the other thing is, one of the other bigger differences is that we are looking at different timeframes. Sometimes we're looking at coordination of timeframes, alignment, and sometimes we are looking at mid-bar signals that we use then a different time frame to actually act on a mid-bar signal. Whereas with AES, if we get a mid-bar signal, we don't take any action. We don't take trades that come on mid-bar. With Aurora, there are more opportunities to take some of those trades because we can use a different time frame to time the entry of that signal.
Greg is asking about the parameters of the trade, like AES, holding for 5, having a 20-point stop. Do you want to talk about the parameters we use in Aurora?
Well, there's really 3 different parameters, Greg. The one is we still use a 20-point stop or fractal if it's less than 20 points. The second one is there's one set of signals. There are really 3 parts to the Aurora system, and one of the parts is a signal that we hold for 10 points. We don't lock in 5 points. We hold for 10 points. In fact, we are so confident in holding for 10 points that it could get to 9.5 points, and we're just going to wait. We're just going to wait. And then there's another part of the system that allows us to do a great job of holding the trend. And in those cases, we have a set of rules that allow us to continually modify the stop, which allow us to stay in the trend. And then you decide, what your profit target is. We typically, for a normal market, we typically are using a 30-point profit target. If it's 30, we're out. And there are other times where we are anticipating a bigger market move or a more extended market move, and we'll push that profit target out to maybe 50 points. But at the same time, we have a set of rules that we're using a couple of different time frames to evaluate where we should be adjusting our stop to. So we're adjusting the stop continuously throughout the trend and trying to grab as much as is reasonably possible. So Drew is saying, I've never used the adaptive entry system. Will I be able to use Aurora system? Absolutely. You're going to want to go through the adaptive entry system training to get a core understanding of the signals, and then the Aurora system will have its own level of training.
We have no more questions.
Yeah, I was not intending for this to be a pitch on Aurora, but we're pretty excited about it, and I have had several people question me about what we're doing and how it's progressing. So I'm kind of excited to talk about it. Krista and I are trading it every day, and I think it's going to be an awesome tool for those of you who decide you want to adopt it into your tool set.
Oh, the most important question.
So Greg is asking for an update. So Erin had her baby, little baby girl, Luna Rose, on Tuesday, August 31st. So yesterday was her 1-week birthday. Everybody's good, baby's good, mom's doing great, dad's doing great, and they are getting used to having a little adorable little girl in their household. So those of you who may not know, I think everybody knows this by now, that Erin's my daughter. So this is my first grandchild, and I'm just thrilled to be able to see Luna Rose. I'm going to be heading out to visit her probably in October. So anyway, I'm looking forward to that. And then a couple of people have asked about Michael. Michael decided to just spend his time trading his own account. You know, he's been trading and helping others for quite some time. And he just decided that he wanted to spend his time trading his own account. Well, David, they actually are getting used to some sleepless nights. They have a schedule between the two of them where they kind of alternate who's doing what. And when I talked to Aaron yesterday and got to see my granddaughter on FaceTime, they said they're actually doing very well. They feel rested and they're doing really well. So
I'm just going to put a reality check on that and remind you that it's only been a week. I've got 2 kids. They're a little bit older now. And yeah, they're still in the honeymoon phase.
Oh, but don't say that to them because they're just.
Oh, is this being recorded?
Now, she may have said that because she's sleep deprived. She doesn't even realize what she's saying.
Oh,
Thank you,
lots of
Farrell.
congratulations coming in.
Yeah, appreciate that, Ronald. All right, folks, we don't have any other questions out here. Let me give it just a moment for any comments. Yeah. Who wants the last question? Oh, thank you, Kimberly. Appreciate that. I think she's got to be the best looking child on the planet, Kristen.
Yeah, well, of course.
She is adorable.
She is very, very cute.
All right, so yeah, I know, David. You're very partial to Charlotte. I understand that. Folks, thank you sincerely. Just genuinely, we appreciate you being part of our community. Whatever we can do to help you, if it's within our power, we would like to do that. We continue to develop, create tools. We continue to test tools, and we have other ideas about things that we want to do. And they all have 2 objectives. One is we're always developing things to help our own personal trading. Each of us trades our own accounts. And the second thing is we want to offer you as many tools as possible to help you be where you would like to be. So just put the thought out there about what you desire from your own personal trading. And I think Aurora is going to be the next opportunity for you to immerse yourself in trading. So we'll let you know, hopefully sooner than later, that we're ready to release Aurora and provide the training on that. And when we do, Kristen's actually been working on a curriculum, which is just phenomenal. And when we do that, it's going to be a little different than what we've done in the past. We're probably going to do like a session of learning and then maybe 1 or 2 days of live trading for a period of time. And then second session, because there's different parts to the Aurora system, second session, and then a little live trading to go along with that. So it's going to be, we're going to provide the learning to you, and then there's going to be a practical application of you being able to trade right along with us. So we're looking forward to doing it.
One last quick question. William is asking if we help you get set up on TradingView, and I know there are some great resources on TradingView, and Aaron's created a lot of additional documentation that with your subscription, there's some good instructions provided to help you get set up.
Yeah, William, there is a step-by-step process of instructions on what to do once you sign up for the adaptive entry system. You should do that first, because then part of the welcome letter that you receive is step-by-step instructions on what to do, how to do it, and it's very, very thorough. All right, Kristen, you know, I always appreciate what you do to help our clients, and we will be back tomorrow morning at 7 o'clock in order to do some more trading.
Sounds good.
Yeah, John, I see your note came in late. We did talk about that extensively, so you can listen to that on the recording. All right, everybody, we're going to go ahead and close out now. Thanks for being here.